Good morning, everybody. And let's look at the daily plan and let's see what we have going on here. I don't like the way I labeled this. All right, I'll fix that later. Hi. Okay, so here we are at 6,900. Quick recap here. Thank you for reposting the stream. See that? There's a man that I appreciate. Quick recap, FOMC day, kind of tickled at 6,900 and closed a little bit below. Overnight, Oracle, whatever else it was, Thursday night, bottom tick down here for a second, found support. By the time we were in the pre-market, we opened up, if I remember correctly, above 68.50, and that's kind of where we stayed the whole time. In the overnight session, AVGO, Broadcom reported earnings and the market liked them. I always like to say the market reaction was positive or negative. I don't care, beat, not beat, raised, whatever. If the market liked it, then I like it. If they don't, I don't. I'm not a fundamental analyst, at least not here, not now. And so now we're just kind of consolidating in the 6,900 range. And when I show you the gamma map, you'll see kind of what I'm looking at. 69.20 is the all-time intraday high. 68.80, 580-ish is kind of, he made it. Welcome to the show.
Good morning, everybody.
Let me just show this chart for a second. So before we kind of had that recent breakout, the 16.8, 80, 85-ish area had been the top. And notice we've been consolidating basically 6,800 to 6,900, 100 points for 10 days plus since Thanksgiving. And so here we are in that same range. And the reason I'm pointing out the 68.80, and we'll switch gears to, if I can find it, it's here somewhere. We'll switch gears to option depth for a second. There we go. Thank you. You see right here, 68.80 to 6,800. It says positive gamma congestion zone. On a TA basis, it also makes sense. That was kind of where we topped out, and then we've kind of been occasionally fighting to get through there, even back in October, if you think those lines aren't negated yet. So that's kind of where there's positive gamma. So this is a sticky zone. So 80, 75, potato is a sticky zone with this 85. With this at 85 right here, kind of it's pulled back into here. This whole thing is kind of a mess, technical terms. Now we can just kind of chop in here. Yeah, I don't know that you get much movement, little 5-10 point scalps. But if I were looking for a pullback, 85 would kind of be a natural target area. So 10-15 points from here. I'm going to guess the overnight low is corresponded to that without even looking. If we can get on our horse and get over 6,900, so I guess kind of arbitrarily say 6,905, We have some positive gamma here. We have a run up towards 68.15. The intraday all-time high was 69.15 was 69.20. And we happen to have sellers right up here at 69.25, round number, where we would expect to stall out. So the next zone, if we're over 6,900, let's look at the triangle. If over 6,900, run toward in here, maybe overshoot a little bit and stall at 25 and come back in here. So there's one zone, 6,900 to 6,925. Another sticky zone, 6,900 to 6,980. Below 6,980, 75, the landscape changes. We have this negative gamma acceleration down here, which happens to be kind of near the expected move. Overnight, the expected move took us down to 68.85. Then when I checked it before the open, it was 68.60. So down here is if we should get to the expected move area and exceed it, well, there's long put options that would kind of help accelerate us and pull us down. And from a gamma point of view, there's nothing all the way down to 68.20, kind of where we've been bottoming out the last week or so, give or take 5 or 10 points. Not saying we go there, that's just the conditional path. Personally, I don't think we do, but that's just, it's there, so we have to talk about it. Quick explainer, okay, and so up here is 69.50. Now, yeah, let's get back up on top again. Not that I expect this to happen today or yet, but if we can get over 69.20, over where is this? 69.25. We have some big chunky positions up at 69.30 and 69.50 that could push us up. On the other hand, let's remember, market maker short gamma decays. And if we don't get up here, if we get up here and then fall back, this ends up being a ceiling, a decay flow, as well as a technical analysis ceiling. Oh, we got there, we kind of tried to break it, we did for a second, we undercut it and goes down. So that's how I like to think of the TA and the gamma together. TA would tell us if we got up here and kind of failed, well, then that's going to be a ceiling, and gamma would tell us the same thing, which could put us back into this zone. So let me give a brief gamma explainer. So this is a market maker's required hedging response. If we get there, market makers have to do something. Market makers are the people, when I buy options, you buy options, when institutions buy options or sell them, they're on the other side of the trade, and their job is to stay delta neutral. Their job is not to take directional risk in where E-mini or SPX is going or not going. They don't have crystal balls. They don't try to cause max pain. There's no conspiracy. They're just mechanical machine hedging. The math. The math. Maybe a tad discretion, not a lot. And so, where market makers are long gamma, people sold options. If we're approaching it from below, they have to buy. If we're approaching it from above, they have to sell. However, if we move away from it, then they have to buy again. They're trying to stay delta neutral. So if they buy, okay, so they bought, then we move away. Now they have too much, they have to sell. So you get these zones and that kind of action. On the other hand, if they're short options, it means customers bought them, people bought these puts. So as we go down, the delta of these puts increases, and market makers have to hedge into the move. However, once the move stops, then they release the hedge and it goes the other way. So that's just kind of how these work dynamically together. Simplified version, but practical. Just think acceleration zones to the left, magnets and stall zones to the right, magnet on the way, stall on the way up, but then magnet on the way back down. So here's a magnetic area between 80 and 6,900. If below, gets sucked to this magnet. If above, gets sucked to this magnet. Of course, we can break out in either direction. That's kind of basically it. Kind of relatively simple. Let's go to Periscope. I saw on their Discord they have a new feature, which I'll look at later. So this, I use everywhere. I'm equal opportunity. Gamma, I subscribe to mostly Gamma services. I look at their data, then I analyze it. My job, I don't crunch the data. I analyze what people give me, and I evaluate. Some I think are better than others for different things. And since this is what I do for a living, my own trading as well as helping you guys, I don't mind the extra expense. Of course, I'm not thrilled with it, but it is what it is. Okay. So here we are. So, okay, this is using the Greeks. So this is using gamma, every expiration on the planet Earth to infinity and beyond. And what do we see? 6,900 is big, sticky area. Not surprising, that's because it's there today. Gamma is most intensive, closer to expiration and closer in price. Just for fun, because this is how we have fun, let's put it to position number. You see, there's not a lot of positions there. I mean, there's a lot, but because that's where we are, it's got a lot of gamma. And why do I like to look at position number? Well, that's got a lot of gamma now, but if we're down here at 6850, that doesn't really matter anymore. Well, it doesn't matter nearly as much. So I like to look at position number, knowing that the path, if we get there, the gamma, those positions is going to increase exponentially, or not exactly exponentially, logarithmically maybe, as we're heading in that direction. So just looking at where the bodies are, 6850, this 6,900 area where we are now. So as long as we stay close, it's sticky. Once we're down here, this becomes 6850. Next set of bodies buried below 6850. Not a lot until we get down to 6,800, really, in the big picture, in the grand scheme of things, say next week, whatever, or a few days from now, in the grand scheme of things. If we're talking about more than a 0 DTE trade, if we're talking about something into next Friday OPEX, we'd have to take a broader view. There's a broader view. So anyway, so that's kind of just so you see what the roadmap, the path ahead is. With that, I'm going to shut up and I'm going to let Dewey tell us about E-mini and how he's scalping it. And I did something different today-ish. I kind of did a little combo TA gamma write-up. I did it mostly in my Discord. I'll show you guys real quick. Here's the gamma setup. I'm not going to go through it all right now. Maybe I'll get back to it. And here I have an integrated, where is it? Somewhere here. Integrated TA and gamma setup, right? Outline the structures. We kind of talk about the reaction and then talk about the setup from both points of view, because I had a little extra time in my hand this morning. So I played around with that. Just trying to add features to increase people's value or usefulness. Different people think differently. Let me get rid of. Let me just get rid of this. This was.
I don't think you're a part of enough servers, Doc.
Huh?
I don't think you're a part of enough servers.
Anyway, so here we are. Go ahead. Take it away.
All right, guys, let me share my screen.
All right, let me get off.
Okay, you guys can see this? Oh, not yet.
Let me put it up.
Okay, so right at the gate, what I'm looking for is this pivot here, 68.95. Are we closing above or below? If we're closing above, which we currently are, I think you want to take what's happening pre-market with a grain of salt. But if right now we're closing above, we should climb to my ceiling at 69.09 and then have either a big reject or a small reject. That's kind of where gamma levels come into play to help clear that play out. After that, I have another reject zone between 920 to 930 right in here. I think the view on the S&P looks pretty strong today, but I do trade NQ. So as I'm doing my pre-market kind of watch list and my game plan for NQ, all I'm seeing is downside. So that being said, it's one of those days where there will be divergence between the indices. One of them will prevail. That's kind of how I think about it. And gun to my head, I think NQ is going to prevail today. So if that being said, if the trend is going to prevail, I think it's going to be to the downside, which would be first to be holding below this pivot at 68.95, get a little small bounce here at 68.78, 68.86 area right in here. But I do think we can fall down over here to 68.62. That's kind of my game
68
plan.
what? Where's your
68.62.
downside? Okay, so roughly that kind of where that negative gamma area starts.
Mm-hmm. And I think if we can hold that below, we can see 68.30 relatively quickly and easily.
Yeah, I agree. Just from a gamma point of view, if we get sucked into that negative gamma area that we looked at below 68, 60, wherever it was, so 5 point difference at this point, 68, 65,
Yep.
then there's magnets down there. Now, if they materialize, if people start buying more puts down there as we go down, traders jump in, many people short, options traders, institutions buy a bunch of puts, and then it becomes that reflexive, piling on party. Now, yesterday, interestingly enough, we managed to have SPX close positive and QQQ close slightly negative, and RSP partied and IWM partied and the Dow partied. So we're getting that broadening out, and breadth was like 2 to 1, whatever. But kind of like what you're saying, how long can the S&P survive on that if the generals don't at least kind of cooperate to some degree?
Agreed. Yeah. There can only be so much dispersion. So I'm waiting to see that. I'm probably going to sit out the first hour until the indices start to match a little bit in terms of their trend. And then I'm okay going long today. I'm not opposed to it at all, but I want to make sure that what I'm watching is kind of matching across the board. And I think a first hour or so into the market will clear things up.
Okay, so I just saw a thing. Gouldsby said wages are stickier than prices, wary of predictive value of wages. I'm not sure what that means, but the market doesn't seem to care, so I don't care.
Mm-hmm.
And I often say this. I think most of us traders look at it this way. I don't really care what the news is. Maybe over the weekend I'll pontificate about it. Oh, the market's wrong, the market's right, like as if I can tell the market what it has to do, right? But the reaction, if it's no reaction, that's none of my business, or if there's a positive reaction, that's positive until the algos decide otherwise.
Right. I do think it's important to know when there is news, because if you might be in a trade that might get screwed, but whatever the market's going to move, the chart is going to show it to you. So
yeah, in my daily plan, I put in the time, and then what it is. Because what it is not as important as the time, exactly what you said, because, oh, something's coming at 10 o'clock. Let me be aware of it. That's all.
Mhm. And I just kind of want to share
Go ahead.
with everybody here. This is just kind of the news we're looking for today.
Oh, look at that. Fancy.
Next thing we have is wholesale inventories at 10, and then we have Goolsby at 10:35. So we're kind of out of the important parts for today.
All right, so Goolsby's going to talk again.
Yep. Didn't mean to do that.
Yeah. And yesterday we had a host of Fed speakers. We had, I don't know, 4 of them or something. And they didn't seem to roil the markets. I don't know if they did. The market seemed to be dancing, to its own tune, despite what the Fed people were saying.
Mm-hmm.
At least that's the way it appeared to me. Oh, yeah. Let me get you off for a second. Let's look at volatility for a minute. Do I want to see this one? Yeah, let's look at this one. Bro, look at this. VIX below 15. Now it kind of like in the pre-market was back up above, it's 15.2. Well, wherever it is. I don't know if this updates as quickly as I'd like it to. But what I want to show you, and what we've been talking about, we being me, have been talking about talked about it yesterday, how the VIX and the VIX 9-day were roughly equal, and that's unusual. The VIX 9-day, I'll repeat it, is go out in the future 9 days from now, and then the Friday before 9 days from now, which is no longer this Friday, it's next Friday, which is Friday OPEX, Friday that includes non-farm payroll, Friday that includes CPI, Friday that includes expiration. All that stuff is wrapped into that Friday. And then the Friday after that, which is taking us into the year end, and we'll see what this looks like when we open, because it just doesn't get calculated until after we open. So now the difference between the two, like 2 points, is normal. Before it was abnormal. Actually, that difference is a tad on the extreme. It is normal, kind of complacent. So, I don't know, the market has seemed to be saying NFP, CPI, VIX free, we don't care. Let's see how that looks. So I'd be watching for the VIX 9-day, as well as the VIX, but the VIX 9-day, to get a clue if people are getting nervous and if that nervousness is long-term or short-term. The VIX 3-month had been perking up yesterday, the day before, and the curve was very, very swoosh, very healthy contango. And so just got to keep an eye on the vol space there. The VVIX. So here's another thing, so the VVIX, the volatility is at 95, right? With the VIX down here, I mean, usually when the VIX is 15, basically annual low-ish territory, one would think the VVIX, the volatility would be somewhere in the low 90s or maybe below, not 85. So that's some of that longer term stuff. So this just needs to sort itself out somewhat. And I don't think anybody, it's not rocket science to say VIX 15 seems a little low. How we trade it now, we could get vol up, spot up. We could go up and get volatility increase too. So just keep an eye on the VIX space for clues. That's really what I wanted to say about that. And let's look at the VIX futures. So the VIX futures are at 18.5 and the VIX is 15. That's kind of too big of a difference, if you ask me. So something has to sort itself out here somewhere, because this and this have to be the same on Tuesday night, Wednesday morning. These two have to be the same. just like E-mini is on the day of expiration equals SPX, VIX, and the near-term VIX future. Now, I might have the wrong VIX future up here, but I don't think so. Delayed, okay. Wait a minute, I paid these crooks for real time. I have to see what I'm paying them for. Anyway, so that's that. Meanwhile, back on the ranch, we're just cruising away. Back over 6,900, it looks like, kind of like over yesterday's close, heading, I don't know, looks like it wants to go high. I don't know. I'd like to see it at least get stuck here, you know. That's it. If there's any questions or comments from folks over here. If not, I'm going to wrap early. And as far as trades for today, okay, so here,
Just
here
my
I
last
have
note
no-
is
here I have
I'd
no-
like to watch that 10:30 time frame to see if what the Fed speaker is going to say. I really do think that's kind of a reversal time area where things can just kind of reverse regardless of where trend is. So I try to be patient until then. Don't risk a lot. That's kind of my approach.
after the market on open orders go through, after all that stuff comes through, then the traders come out of the woodwork.
And we have the Fed speaker at 10:30 as well. So I think
Right,
just
10:35, right? Yeah,
waiting for all that I think would be pretty smart today.
yeah. So here's got a little toy VIX trade I did. When did I buy the 18.5 puts? When we were 20. You know, but so not buying them. Okay, anyway, go where the puck is, skate where the puck is going, not where the puck is. So the potential convex move. So there's two ways to look at this on the put side. That's cheaper shit. I kind of like that right there for 60 cents. I don't think you can go wrong with that. I'm putting that in right here, right now. But that said, if you want to get like, if we break that 80 thing, if we have kind of the day that we're talking about here, you know, you can go like, something like 75, 60, 45. That's not adding up right. I want to buy the 75, even sell the 60 bomb of the expected move, and buy the 45 for 75 cents, bro. If we start to go down at all, that'll pay sweet. If not, so you lose 75 bucks. However, these things are very forgiving. I bought a put down here yesterday for 10 cents. And even though we were like 20 points higher, I got out for 25 cents. You know, so these things are kind of funny. These things are kind of funny. I like the flies. So I'm going to put this one in as well in the other account so it's not stepping on this one. On top, let's look at another fly. Well, we know we need to get over 69.05-ish. And we're supposed to stall out up here somewhere. That's expensive. I'm not paying them for this. That's expensive. I'm not paying them $1.45. Sorry, guys. I'll give them a quarter for this to have something to play with, though. Sometimes I'll do a 15 wide, sometimes a 10, sometimes a 5, just depending where we are. Then as we pull back, then I can add to this and play with it. Gun to my head, what do I sell? All right, I'm willing to challenge them at 69.50. And the bottom is kind of a little bottom. I would wait. So what I'll do is I'll put in a wish trade down here at 68.20. Like that is 35 cents. Let's see if I can get 50 cents for it. See what happens. And as far as directional moves, if there's a potential for a convex move up, maybe 10 points or so, I think for scalper types, the convex move is down. Not saying we go down, but if we do, that's where the money will be. And that's it. Okay.
Good luck, everybody.